I want to take a moment and talk about the effects of the election on your investment portfolio. First of all, the political and the economic environment have not changed. We're going to have the same president, the same party in the Senate controlling the Senate, and the same party controlling Congress. So you may ask, well, David, why did we have a sell-off in the equity markets the day after the election? There was an anticipation that there might be a Romney win, which would have changed the political and economic environment. And when that didn't occur, there was the market correction. Well, another thing to keep in mind is political and economic environments are not good or bad. They just are. What's important is that you're able to cope with them effectively and move and act within them to take care of your financial and your investment concerns. So let's talk about that. What are we doing now with our clients? Number one is managing your mood. If you're in a mood of panic or despair, you tend to make poor investment decisions, which affects your ability currently as well as for the rest of your life to take care of your financial concerns and have enough saved and invested. Check your mood. Is it effective or ineffective for producing good actions for taking care of your investments? If you'd like to have a conversation with us about mini insertions while we're very optimistic for having equities in your portfolio, call us. Secondly, expect higher inflation. Fiscal irresponsibility that's going on now looks like it will continue, where the Federal Reserve is buying $40 billion worth of our Treasury bonds each month. That means they're printing money. More money in the marketplace equals higher inflation. If you're a current client of ours, we've already structured your portfolios to cope very well in high inflationary periods. Third is tax mitigation. Income, dividends, capital gains, and the estate tax are all scheduled to go up in 2013. Plus, there's 3.8% Obamacare surtax. So within tax mitigation, we're working with our clients on three practices. Number one is to have very, very tax efficient portfolios. This has never been more important. Our investment philosophy of being passively invested pushes down on turnover, and that means it pushes down on tax impact costs, giving you, the investor, more accurate tax return. Secondly, working collaboratively with our professional network to mitigate the 55% coming estate tax as well as the 3.8% Obamacare surtax. And last but not least is strategically and globally allocating your portfolio, because there's other economic and political environments across the globe, and strategically capturing those returns when they occur. So in summary, what are we doing with our clients? Managing our moods. Number two is in expecting higher inflation and coping effectively with the portfolios. And number three is strategically and globally allocating portfolios to capture those returns. Know those practices. Call us if you'd like to embrace them.